Now, back in my day when I started investing in dividend paying stocks and ETFs around a decade ago, I bought my first 2 shares of whatever it was back then. I was always sort of interested in monthly paying dividend stocks just because getting paid more frequently, more cash flow in my portfolio not only seemed attractive, just to give myself little hits of dopamine along the way, along the journey of dividend investing, a long path that can seem very boring at times, but also getting more cash flow in your portfolio even quicker and then reinvesting that into more stocks and ETFs just feels like the portfolio can compound that much faster, at least in my head. But since then, not only have monthly dividend paying stocks and ETFs got really popular, but then as of recent, maybe in the last year or two, we've been seeing tons of weekly paying dividend ETFs come out like crazy, and I even own several of them in my portfolio. And I will say, for whatever it's worth, getting paid weekly from an investment absolutely feels amazing. Especially because, think about it, there's only 5 trading days per week in the market. So if you own a few of these weekly payers, let's say one pays you on Monday, one pays you on Wednesday, and then Friday, 3 different payers, you're getting paid 3 times out of 5 days a week, which is absolutely awesome. Now that brings us into today's video, a brand new ETF that I just came across, QLDY, the NASDAQ 100 Lightning Spread Income ETF. And it says right here, QLDY is the first ETF designed to make distributions twice weekly, aiming to deliver more frequent income than traditional income-focused ETFs. So you guys already know what we're going to do in this video. We're going to go through this ETF. We're going to see what it has to offer, how in the world it's potentially going to pay us investors twice a week. And then later on, I'm going to share with you guys what I think about it. If or if not, we're going to find QLDY in my portfolio. So if this sort of thing interests you at all, make sure to stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has already helped countless dividend investors get started with their journey. And my custom dividend tracker, the one I use all the time on my videos, has also helped so many investors stay organized and has actually helped them see their dividend income grow. Well, today I have something even better for you guys. When you click the first link down below in my description and you grab my A to Z dividend investing ebook, today you're not only going to get the ebook, but you're also going to be getting the custom dividend tracker, which you can use to track your own dividend income ongoingly, get direct access to my personal email where you guys can email me any questions regarding dividend investing. You're also going to receive a link to view all of my holdings inside my 7-figure dividend portfolio and see all the positions I add and take away ongoingly. And you're going to get for absolutely free my brand new high yield dividend investing ebook, where I show you the power of maximizing some of these high yielding ETFs and teach you everything there is to know about that also. This is going to be your one shot to grab everything inside of one single bundle, but you got to move quick because I'm not going to offer this for long. Now with all that, let's get back into the video. Now first, to back up for a second, let me make this very, very clear. Just because a dividend ETF or stock pays out on a certain frequency, I think we all have to understand that it doesn't necessarily mean that it's better or worse. I mean, for example, if a dividend stock pays out 33 cents per quarter and another one pays out 11 cents per month, it's the exact same amount you're getting paid out. But like I said, I can argue that getting paid more frequently is actually a better option. But that's just my opinion. Now, I think these fund providers are obviously catching on to the fact that a lot of us dividend investors do want to get paid out more frequently. Like you guys know, there's tons of different weekly payers throughout the market that keep on coming out, and there's so many to choose from these days, I honestly can't even keep up with it. So it's probably no secret that Defiance ETFs thought about this and maybe came up with the idea that they're going to create an ETF that not only pays weekly, but twice a week. But let's read into this and see how this ETF works, etc. It says the NASDAQ 100 Lightning Spread Income ETF, QLDY. It says QLDY is an actively managed ETF that seeks frequent income while maintaining the opportunity for indirect exposure to the performance of the NASDAQ 100 index, subject to a limit on potential investment gains. So far so good. I personally do seek out a ton of exposure to not only the NASDAQ 100 through high income strategies, but I also want to have a ton of S&P 500 exposure too. Having both the diversification from the NASDAQ 100 and also the S&P 500, but through high income strategies is definitely something I've been building up over the past several years. So far so good. Now it says QLDY is the first ETF designed to make distributions twice weekly, aiming to deliver more frequent income than traditional income focused funds. Now, some of you guys might or might not know, I'm currently building a long-term portfolio to hopefully live off of later on in the future, use all my dividends or some of my dividends in the future to pay for things like bills, expenses, pay for things like vacations. So getting paid once a week, twice a week, the more money that comes in, the quicker. Is definitely going to help my personal situation, just because, again, I know it's the same difference if you get paid quarterly in theory, but getting more cash flow in the portfolio, more money in the cash balance is definitely going to help things when it comes to cash management. Now, getting into the thick of it, it says the fund uses a proprietary lightning spread strategy, which combines 2 approaches. Now, synthetic equity exposure through deep in the money call options on the NASDAQ 100, providing participation in equity market performance. Next, it says daily option premium generation through a systematic sale of 0 days to expiration or 0 DTE put spreads, seeking to capture rapid time decay from short-dated options. So it does look like they are going to be using a very short duration option strategy, which does have the potential to generate a ton more income because, again, rapid time decay means that there could be a ton of premium to be had. It says then by blending these exposures, QLDY seeks to provide investors with consistent income opportunities along with measured equity participation. The strategy is designed to balance potential growth and premium income while recognizing the risks of option trading and market volatility. It then says the investment objective. The fund's primary investment objective is to seek current income. The fund's secondary investment objective is to seek capital appreciation. So this is going to be much more of an income-focused ETF with capital appreciation being a secondary thought. There's no guarantee that the fund investment strategy will be properly implemented, and an investor may lose some or all of its investments. While the ETF seeks to provide twice weekly income, there is no assurance a distribution will be made. If distributions are made, it is likely such distributions will vary significantly from one distribution to the next. Now, I like the fact that they're actually making this very clear. It's always nice when a fund tells you that there's going to be a targeted distribution rate, so kind of expect this. Don't guarantee it, of course. Anything can happen, but it feels good to know when the fund provider is giving us an idea, so it's not very confusing later on. It lastly says distributions from QLDY include the following estimated return of capital, and it doesn't have anything as of right now. Distributions, which include return of capital, decrease the fund's NAV, and trading price, which over time can result in losses on an investment. Now, the fund did start trading just a few days ago on September 17th, and it already looks like there is some money going into the fund, so investors are obviously interested in what this fund has to offer, and of course, I'm very interested to see how this plays out. Now, maybe the coolest thing of all is looking at the future distribution schedule. Again, maybe things can change in the future, but right now it shows the payable date is going to be the 2nd, the 6th, the 9th. These are so many payouts. I've never seen something like this across anything, which is because, once again, this is the first ETF to ever do this. So what's my takeaway on QLDY as of right now? Obviously, the ETF is brand new. I love to see it trade for a little bit longer and learn a little bit more about it. See what the distributions are like. Is it going to be a 15% distribution rate? Is it going to be a 30 or 45% distribution rate? A few things I do like is the fact that it does offer NASDAQ 100 exposure, which is an index I do want more exposure to. And obviously, I do not hate the idea of getting paid income twice a week from any investment at that. So to be honest, I'll probably add some QLDY to my portfolio in a very small amount, but I would love to watch it trade for a little bit longer. So now that we talked about QLDY, the first ETF designed to make distributions twice weekly. I lastly, most importantly, have a question for you guys down below. Will we be finding QLDY in your long-term portfolio? Yes or no, and let us know why in the comments down below. If you enjoyed this video, make sure to please drop a like on it, subscribe, and I'll see you in the next one. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.